Hey everyone, I'm so excited about today's episode, but first want to let you know that this show is made possible by Fortune Builders. I also want to take a minute to invite you guys to an amazing opportunity to learn from some of the top experts in the real estate industry about how to get started in real estate or scale an existing business to the next level. Fortune Builders is hosting a one-day webinar to help you learn about real estate investing in today's market. So throughout the show, if you feel like you're ready to get started, go to fortunebuildershow.com to register. Again, that's fortunebuildershow.com to register. If you're watching on YouTube or Facebook, you'll find a link right below the show so you can get there that way as well. And please remember that the content of this show and every show is for educational purposes only. Myself or our guests are not going to be providing any legal, financial, or professional advice. If we share specific results, they are attributed to an individual or a business, and we can't guarantee the results will happen for you, those earnings or the income will match those figures. The bottom line is there's always risk when investing in real estate. You can make a lot of money or you can lose a lot of money, and it's hard work. But that doesn't mean we can't have fun doing it. So let's get into today's episode.
From a team that has $1 billion in real estate investment experience. A show to help you learn the strategies and systems it takes to get started investing in real estate. This is the Fortune Builders Real Estate Investing Show.
Hey everyone, Jeff Rutkowski here. Welcome to this week's episode of the Fortune Builders Real Estate Investing Show. I'm excited to be with you. We're going to get into on-market versus off-market properties today. As real estate investors, whether you know it or not, we are always playing in one of those two buckets. So we're going to break down what they are, what it means, what the difference is, and really where we should spend the most of our time as real estate investors. Let's kick it off with the word of the week, though. The word of the week this week is proof of funds. Proof of funds. So it pretty much is what it sounds like. It's showing proof, it's showing evidence that we have the funds to support the offer that we are making on a piece of real estate. The good news, though, is it does not have to be our own money. It certainly can. However, a proof of funds could be a bank account statement with your name on it. If you're making an offer for $200,000, you have $200,000 cash in the bank, you show a bank statement, bam, there is a proof of funds. I don't know about you, though. When I got started, I didn't have $200,000 sitting in the bank. I probably had about $200 sitting in the bank. So that was not going to get the job done for me. So there are many lenders out there, hard money lenders specifically. There's many online lenders, transactional lenders. You just Google, transactional lenders in Atlanta, Georgia, transactional lenders or hard money lenders in Hartford, Connecticut, wherever you're investing. And very quickly, you'll find a list of them, and we can reach out to these companies for a proof of funds letters. There's even many online services. One I've used in a pinch before was besttransactionlenders.com, where you could just put in the property information, about 5 minutes, have a proof of funds come to your email box. But the bottom line is for on-market properties, we're going to need to show proof of funds. So as a real estate investor, that's something that we want to have. So when it's needed, we can position or put it forward. So that's the word of the week, proof of funds. But let's get into today's show. All right, so as I said, we're going to be getting into on-market, off-market properties, really breaking down the difference, though. Before we get into that, though, we're sitting here at the end of March 2022. People are always asking just, what we think about the market, where the market is going, how to, best position ourselves as investors to maximize any and all opportunities. And in case you haven't noticed, the market is still strong. The market is strong. It's still unlike anything I have seen in my lifetime. In many areas of the country, we had double-digit appreciation, actually just since the first of the year. There's actually only one market in the whole United States over the last year where rents went down. That happens to be Kansas City, Missouri. So overall, we things haven't changed much since the last time we talked about it. We are still at record low inventory in our country. It ticked up from 1.8 months of inventory to just like about 1.95 months of inventory. And just to remind you, a healthy balanced market is when we have 6 to 7 months of housing stock in supply. So we are still well below that. The Federal Reserve, we did just tick up interest rates last week, another 0.25%. And they pretty much said over the next 6 meetings that they have this year, every single meeting they will raise rates again 0.25%. So if you do the math on that, that's about 1.5% that we can expect interest rates to be rising between here and probably about a year from now. Again, that's not guaranteed. That's what the Fed is telling us, but we'll see what happens in the coming months. But the bottom line is, even if you tack on 1.5%, we're still playing with very cheap money, and a lot of it available to us right now as real estate investors. So inventory is low, interest rates are still low, which is a great thing, and the market is hot. And did I mention we're printing a lot of money right now? A lot of money in our country. We've printed since 2008 almost $24 trillion. And between now and the end of the year, there's going to be a lot more coming. I was actually reading coming in here today, California, to combat gas prices, because gas prices, everybody knows, is very high. So their plan is to give basically $400 to all California residents, per car, up to 2 cars. So about $800, which sounds great. I'm sure a lot of people think, oh, that's cool. The only problem is it's about $11 million program that we don't have the money for. California's kind of broke, but we'll just print some more of that money and hand it out like we have been doing. And what happens with that is, the more copies you make of something, it lessens the value, and that's the US dollar, and it continues to drive inflation higher. So inflation is a serious problem in our country right now. It definitely breaks my heart because it's hurting a lot of people on fixed income. As a real estate investor, there is a part of you that enjoys inflation because your net worth, just continues to rise month after month on the real estate that you own, and what you can charge in rents, continues to rise. So definitely, one of the things, I was listening to a mentor of mine over the weekend at an event I was at, and basically he was just like, I want to teach all of you how to benefit from inflation. And there's in our lifetime, there's going to be inflationary markets like we're living now. There's going to be, it will come back down again and things along those lines. But we want to own assets, and really that's what this show is about, is providing education so you guys can take action and obtain more assets, single family homes, multifamily homes, retail shopping centers, whatever floats your boat. As long as it's real estate, I'm for it. Many other great asset classes out there, I just don't know anything about them. I know about real estate. It's been very good to me. So those are my thoughts on the market, but keep the questions coming, on social media and whatnot. I do enjoy jumping in there and looking, seeing what you guys are thinking about and what you want to hear more of. But on market and off market properties, anytime as a real estate investor, we are looking at properties, it's going to fall into one of those 2 buckets. So on market properties, very simply defined, is they are on market, listed with a real estate agent. They're listed with a real estate agent. And off market properties are really anything that you're going to be dealing direct to the seller. So they are not listed. They are not on the multiple listing service. So let's get started here with on market properties. So on market properties are, as I said, on market, listed with a real estate agent. They list their properties on what is called the MLS, which stands for Multiple Listing Service. We had Dan on the show a few weeks ago. We've talked a lot about that. It's definitely a great way of acquiring properties if you have a very systematized approach. The great thing about on-market properties is once a realtor lists it, it becomes public information where they list it onto the MLS. the MLS will then syndicate and push those listings out to many sites that we're familiar with, like Redfin, Zillow, Trulia, Realtor.com, all these different places where if you have internet access or access to a real estate agent, you have access to those properties. So that's a good thing. It doesn't cost us anything to find those leads, and leads are very valuable. The downside to it is everybody else in the world has access to them as well. So on market properties tend to be where you find the most competition. Now, JD and CT Homes, you've heard our MLS system in previous episodes. It's something that we teach and we implement at a very high level. And I believe last year, out of 123 of the homes that CT Homes did, I believe about 48 of them, if I'm not mistaken, came through on market properties. So just because there's a lot of competition, it's not something that we should be discouraged from pursuing. And really, the main reason why you want to have a strategy for acquiring on market properties is about 80% of all properties that trade or sell in the United States trade on market. So the inventory is massive, it's too big to ignore. But typically, it's hard to build a business. If you're looking at making real estate investing a career, where that you want to do that full time, that's what you want to get into. You want to look at on market properties as just one line in the water, but you want to have a few other, at least 2 to 3 other marketing campaigns, strategies of acquiring properties where you get direct to seller. But on market properties, list it with a realtor or list it with a broker. So in order to go see those properties, you're going to need to go directly to that listing agent that's listing the property, or go to what they call a buyer's agent. So for those of you that are brand new to this, is when realtors list a property, typically they have an agreement with the seller to list and sell their property for usually between 5 to 6% commission. So if the property sells for $100,000 and it's listed at 5%, then there's $5,000 in commissions that the seller is going to pay the agent or the agents that take part in the deal. So a listing agent, when they list a property, if they list it at 5%, they're going to put it out on the MLS and they're going to offer about half of that, 2.5%, to a buyer's agent. So now if I'm a listing agent, I list a property and, JD happens to be a buyer's agent and he brings the buyer and we do the transaction together, then 2.5% is going to me as the listing agent, 2.5% is going to JD as the buyer's agent. So we're going to be dealing that. Now, I found it most effective, especially in this market, to go directly to the listing agents, because if the listing agent is listing the property for the seller, again, they have an agreement probably where there's 5% in commissions available. And if I go directly to the listing agent and they represent me as well as the seller, then in most states, they can do what they call dual representation, represent both of us, and now they made 5% commission, so that realtor makes more on the deal. So most realtors are looking to sell the properties themselves because it's a bigger payday for them. So it's a little motivation. And then also, too, many times to make deals work, if the agent is representing both the seller and the buyer, they may cut their commission. I actually had that happen not too long ago on a house I bought for myself, where I went directly to the listing agent. The listing agent had an agreement, at 5%, and he actually cut his commission 2% and made 3% on the deal, which is still a half a percent more than what he would have made if a buyer's agent brought it. So there's definitely advantage to doing that. Now, with that being said, just ethics and integrity, I need to point this out because it drives me nuts when I see people do this, is if you connect with a real estate agent to find you properties and they bring you something that's not their listing, you should definitely go through that agent and have them represent you to see that listing. To get that from them, oh, thanks, that's great, and then cut them out, go directly to the listing agent, that's bad business. You're going to get a bad reputation. They're not going to send you any more deals. So that's how we'd like to do that. So we're going to be dealing on market with agents and or brokers, and then proof of funds will be required almost 100% of the time. almost 100% of the time when you submit an offer, you will have to provide a corresponding proof of funds. And that was our word of the week this week. And as I said, it could be a bank statement with your name on it. It could be something that you acquired from a hard money lender or a transactional lender in your local market. Some private lenders will provide them for you as well. And one thing to note is just because you use a one company's proof of funds letter, it doesn't obligate you to using their money to do the deal. It's kind of a funny story, but the first hard money lender I ever synced up with, it was in New Haven, Connecticut. It was called Sunrise Financial. It was actually Than and JD referred them to me. They were great. They funded probably my first 5 projects. At the time, though, their money was expensive, and it was kind of I say expensive, but it was kind of the going rate at that time. Hard money in today's market is pretty cheap. You know 0 to 1 points, 6 to 8% typically is what I'm seeing today. Back then, this would be going back to 2007, 2008, somewhere in that time frame, where I was paying 5 points and 13.99% in my cost of capital. I know some of you just fell off your chair hearing that, but remember, it's not the cost of money, it's the availability. So because the cost was higher, I just had to adjust my numbers a little bit so I could still hit my desired profit. In most cases that I did, sometimes a little less, a little more than what I was aiming for, but you should always focus on the availability, not the cost. Now, we always want to source cheaper capital, and it's a great time to be doing business today because, as I said, rates are pretty low. But Sunrise Financial, they did my first 5 transactions or whatever it was, and they gave me a proof of funds letter. And then after those first 5 or whatever it was, I went on and I used their proof of funds letter probably for the next 5 years, but I never used their money. I actually found out I was using their proof of funds letter, not knowing that they had went out of business. So it's just kind of a funny story, but it's just a box that when you make an offer on market properties that you have to check, that a realtor is going to want to see that you have a proof of funds. Now, a good realtor should verify the proof of funds, and they should call the lender to make sure that you're good to go. Now, obviously, I guess I wasn't dealing with great realtors because I was using a letter from a bank that was out of business, and still did deals that way. But anyways, you guys get the point. Proof of funds is going to be required. So when you're looking at making offers on these on-market properties, it's something that you want to have lined up. Another thing that you need to know about on-market offers is that typically you're going to have to put down larger deposits. You'll see when we get into off-market in a moment, a lot of times you can lock up deals for, $500. Having $500 down, and you get the seller's signature. Now you control the asset. Where on-market properties, typically, there's going to be something in your market that's customary. So in my home state of Connecticut, it's customary when you make an offer, you put an initial deposit of about 1% of what your offer is. So if you're offering $300,000, you have a $3,000 deposit down. And in many cases, they want to see an additional deposit that is due upon the seller's acceptance. So in Connecticut, typically you'll put down 1% when you present the offer, and then there'll be an additional amount due when the seller accepts your offer. And on a $300,000 to $400,000 property, you're probably looking at anywhere from $5,000 to $15,000 that you're putting down on those deals. So that's something to be aware of. Here in Southern California, it's very common that there's anywhere from $25,000 to $50,000 down into deposit, for the homes out here. And our median home price here in Southern California last week was at $810,000. So you're dealing with higher price point properties and higher price point inventory that you need to be aware of. So that's something that you definitely want to know as well. And then finally, as it pertains to on-market properties, because we're working with realtors and we're working with brokers, we're going to be required to use their contracts. So every state, every county, every realtor board will have their own contracts that they want you to use. Off-market properties, we're going to use our own. I have a simple, 2-page contract that, I got from Fortune Builders years ago, and I've been using it, for the past 10 years, and it works like a charm. But On market properties, you're dealing with the state contract, the board of realtors, contract that you're working with, which is fine. Nothing wrong with that. The only thing that you want to be aware of is certain contracts have certain clauses and restrictions that, depending on what you're trying to do, depending on what your exit strategy is with the deal, it may prohibit that. So what would be an example of that? An example would be maybe you're a wholesaler and you want to wholesale on market off the MLS, which you can do all day long, but you're using a realtor's contracts that in the contract it says that this contract is not a signable. So one of the ways that I love the wholesale, that a lot of investors love the wholesale, is via assigning contracts. You're essentially locking up a deal with you and the seller, and then you're selling that contract. You're selling that right to buy the property to another investor, to maybe a local rehabber or whatnot. So if the contract is not assignable, then you're going to run into some trouble there. Now, state contracts, typically most state contracts will allow you to sign. So typically what you'll see, one of three things in a state contract is, number one is you'll read the contract and you won't read anything in there about assignability. And if you don't hear anything in the contract about assignability, then that contract is assignable. So that's something that you just want to know. If you read through it and there's no language, no clauses, then you can do whatever you want with that contract, which is great. In some states, like the state of Florida, for instance, Florida, in parts of the state, in their state contract, there's a clause, a paragraph in there that basically says, that the buyer, if the buyer wishes to assign this contract, they need to check the box indicating so. There's usually two boxes. I want to assign this contract, or I don't want to assign this contract. But they're having you signal your intentions up front. So that's something to be aware of, where the agent, the buyer, the seller, from the beginning of the transaction will be aware if that's an exit strategy that you want to use. In the state of California, in our state contract, there is a paragraph. You're not checking any boxes or anything like that, but there's a paragraph in the contract that says if you want to assign it, you can, but you will need in writing on a separate contract the permission from the seller and the new buyer that you're assigning it to. So we have a one-page addendum here in California where you would sign as the buyer, the new investor that you're signing the contract to would sign, and then the seller is signing off on it as well. And again, this is in the context of just on market. I'm going to get into off market in a minute, and you'll see there's a lot less restrictions. But if you're dealing with an on market property and you want to assign the contract, I'm just using that as the example, then there's going to be a separate addendum that you'll use for that. So really the moral of the story here is just nothing wrong with using the realtor's contracts. Just read through them to make sure that the contract allows you to do what you want to do with it. Now, because we're on market and we're dealing with real estate agents, just a couple tips there is when you see the agent's, listing, whether it's on Redfin, whether you have your own MLS access, which we suggest, make sure that you read through it and follow the realtor's instructions. You'll see a lot of times it'll say, don't call. The realtor will say, don't call me. Text this number if you have a question or if you have that. So realtors kind of get annoyed if you don't follow their instructions. So we want to make sure that we follow what they laid out in the listing, how they want this to transact, and do it their way. Just gives us, it makes the transaction go smoother, and it also just gets them on your team, which is something that we want. We do a lot of on-market properties out here, and one thing that we found, for whatever reason, is you want to get realtors on the phone, though, to talk between 8 and 9 a.m. Statistically, we track this stuff, has been the highest answer rate for real estate agents, which makes sense. It's earlier in the morning. They haven't gotten to their day yet, maybe schedule appointments for later in the day. So what we like to do is when a property hits the market that catches our attention, we want to call up that agent and, kind of run them through what we call the agent lead sheet. The agent lead sheet is just it's a one-page document that we use to get all of the pertinent information to really determine if this is a motivated lead for us. And really the key there is um, you don't want to get the agent on the phone and say, hey, tell me about the property. That's like the last question that the agent wants to hear. They're going to say, well, read the listing or read the advertisement on Redfin. So make sure that you read through it. And then you want to ask really questions about motivation. Just say, hey, you get them on the phone, Mr. Mission Agent. I read through your listing. Understand, about the property. Is there anything going on with the property that I may not have read in the listing in terms of, repairs needed? And kind of let them talk, out of curiosity, why is the seller selling? One question that we love to ask, and this has worked like gold, is asking the agent, well, we'd love to come see the property, and assuming we're able to agree on price, are there any other terms or conditions that would make our offer attractive to your seller? And that's a powerful question because it'll really help us understand what is the motivation between the seller. Why are they selling the property? What is their pain point that we can bring a solution to? And as we talked about many times on this show, as investors, a lot of times we see through the lens of price, where the most important term of the deal is price, because we need to make a profit. But in many cases, a distressed seller, they're worried about many other things, and a lot of times lower on the list is price. They're worried about, hey, my credit is shot, I'm being foreclosed on, who's going to rent me an apartment? Or they can't afford, moving cost, or whatever it may be. Maybe the house, they inherited the property and it's just full of garbage. They live out of state. How am I going to get this thing cleaned out? So we can just account for a couple extra dumpsters in our offer and just say, hey, leave the property as is. You've heard us talk about that many times on that show. So it's really, but that's the question. That's my go-to question when talking to realtors. Assuming we're able to agree on price, are there any other terms and conditions that would make an offer from us stand out to your seller? And that'll give us the intel that we need to structure the offer. And my last piece of advice on when you're going to be consistently making offers on market properties is get your own license. Become licensed as a real estate agent, in addition to being a real estate investor. Now, what that does is it just automatically gives you a higher level of credibility within the real estate agent community. They just tend, some real estate agents just don't take investors seriously or just don't like investors. That's just some do, some don't. But when you approach them as an agent, then it's kind of like you have that in common. You're one of them. It just gives you a high level of credibility and rapport. Also, other benefits of getting licensed is that you have your own direct access to the MLS, and things along those lines. So that is on market. I want to switch over to off market here before we wrap up the show. But also want to remind you, like we do every week, if you're sitting here listening and you are interested in getting started as a real estate investor, we would be honored to help you with that. And we actually recently launched a fairly new course. I think it's maybe only about 4 weeks old now. And yours truly is one of the instructors, along with another gentleman named Woody. And on a weekly basis, we are doing it's about a 2.5 hour class. And it is really geared around how to get started as a real estate investor. We focus on how to find motivated seller leads, how to quickly and confidently evaluate properties. What are the systems? What are the formulas? What are the tools that we use to do that? So you guys can mirror those same things. And then we actually focus on wholesaling those properties, just because that's an exit strategy when you're beginning that any investor can do, regardless of your credit, regardless of how much money you have in the bank. So it's a powerful class that students are loving. We're getting some great feedback on. It's really helping a lot of people get started in the business. So if you want in on that, you want to click the link below this video, fortunebuildershow.com. Grab yourself a free ticket to that training. If you're listening on any of the audio podcast platforms, just type into your URL, and I look forward to seeing you at one of those trainings in the near future. All right, so let's take a look here at off-market properties. So we went through, just to summarize, on market, you're dealing with realtors, you need proof of funds, you have to put down larger deposits, you're using the realtors and or brokers contracts, and we recommend getting licensed. Now, the downside to that is it's very, very highly competitive. So we want to put ourselves, I mean, I don't know about you, but if I'm going fishing, I want to fish in areas that are maybe a little harder to get to, that maybe are a little more secluded, that the average fisherman doesn't know exist. So I have a higher probability of catching a fish. It's the same exact principle here. You can catch fish off the MLS. You can do deals off the MLS. You just have to kiss some more frogs, to find that prince, just because of all the competition. And typically, whenever I hear somebody, kind of complain about, oh, Jeff, just the market's so competitive, and every time I make an offer on a property, there's 10 other offers on it, and things along those lines. I'm just having a hard time getting deals. After I ask a couple questions and peel back some layers, typically that investor is really just working with on-market properties. So do that, but let's look at, all right, adding one or two other lines in the waters that can put us direct to seller. And that's really what we are after. We're after off-market properties. We are after, what we call hidden markets. They're not really hidden. It's just most people don't know about them. So it's like that fishing spot that most people just don't know about. It's there. It's there. You just got to know how to access it. So we work a lot on that, and I'll talk about that in a moment. But you want to have, as a brand new investor, we recommend having 3 to 4 different lines in the water. One of them should be on market, and then the other 2 to 3 are really targeting specific type of off market properties, so we can get direct to seller. And I'll go over some of those in a moment. So direct to seller is one of the main differences. Is you're not dealing through a real estate agent. You are dealing with the person that owns the property, and that you need their signature on the contract. So I love that personally, because to me, that's an advantage if you know how to negotiate. Now, when you're dealing with on-market properties through a real estate agent, you're kind of, the agent is the middleman, right? You're communicating to them. They're communicating to the seller. The seller's communicating to them. They're communicating back to you. You don't know how, your language, you don't know how your offer is being translated when you communicate to the agent and it goes through. Some are better than others. But we just don't know. I like to be in control of that. I've spent a lot of years studying, the art of negotiating. We have an incredible class here at Fortune Builders that I highly, highly recommend, called the Sales and Negotiation Academy, where we just spend 2 days drilling on how to negotiate, how to sit down across the table from a seller, what to say, what not to say, what are the top 10 objections that you could possibly get, how to overcome them, how to get better pricing. So that's a skill set. And that's really, in my opinion, one of the number one advantages that a real estate investor should have, is that they're prepared, that they've studied, that they've practiced. So when they're sitting around the table with the seller and an objection gets thrown at you, like, hey, your price is too low, or whatever the objection may be, that you're not lost for words on how to combat that and how to overcome that. You have a tool in your tool belt, and it's like second nature just to respond back. Now, we're not going to overcome objections 100% of the time, but in my opinion, you should be overcoming them about 60 to 70% of the time. So if you're getting objections thrown at you, and you're not overcoming it, or 1 to 2 out of 10 times, then you just need a little higher level education just to understand how that works. But the beauty of off market is we are direct to seller. We are dealing with them. We are presenting our offer, and nobody really should be able to present your offer better than you. Another advantage of working off market is you could use whatever contracts you want. I referenced earlier that I have a 2 to 3 page contract I've been using for a number of years. It's very, very simple. And the reason why that's important is when you're face to face with a seller in their kitchen and you want something very easy to understand, very straightforward, something that's not going to overwhelm them, easy to understand, easy to follow. So really, it's the one that I use. It's 2 pages. It really outlines who the buyer, who the seller is, the property that you're purchasing, how much are you purchasing it for, your inspection contingency, and then when you're going to close. It's really very simple, that straightforward, and that in and of itself will help you get less objections. California, our state contract out here is about 13 pages and then goes up to about 17 pages with addendums. So if you're laying out 17 pages in front of a seller, that can be kind of intimidating. So off market, we're using that. We control how the deal goes. And also proof of funds. I mean, I've been at this, guys, for about 15, 16 years. And in those 15, 16 years, when dealing with off-market properties, I've only been asked for proof of funds twice. So we should have it, as I mentioned earlier, we should have it. So if they ask for it, but it's not something that I put forward in an off-market transaction unless I'm asked for. Another huge advantage of off-market properties is smaller deposits, where in many cases, in most parts of the country, you can control a contract for as little as $500. So, and in my experience, you guys, but definitely, let me know if you're experiencing something different. But really, in my experience, is my most profitable deals as a real estate investor have always come off market, And the beauty of off market for us as investors is the sellers that we're looking for, it's all public records. So we're in the business of buying properties 30 to 50% below market value. And nobody wakes up in the morning in their right mind and says, hey, my property's worth $1 million, but I'd love to sell it today for $700,000. Nobody does that unless there's circumstances happening in their life that causes them to have to do that. So many different categories of distressed sellers. It could be if they're facing foreclosure. They could be an absentee owner. One list that I love is absentee owners that own vacant properties with high equity. So that's kind of like a triple dipper there, where we're layering 3 different types of leads. An absentee owner is somebody that they own a property in Florida, but let's say they live here in San Diego. So they're absent from the state that the property is in. So typically, if somebody's an absentee owner, it's probably a rental property. They're probably a landlord in some capacity. But we found in many cases, a lot of times, those properties are vacant. So I like that list a lot because, maybe they've owned the property for a number of years. They live in another state. They're trying to manage the property from across the country, or they're having trouble finding a good property manager. The house is vacant many times, as I said. And a vacant property, I mean, that's costing you money. I don't care who you are. Vacant property, you're still paying taxes on, you're still paying insurance. Maybe there's some upkeep, utilities, things like that. It's burning a hole in your pocket. So as real estate investors, we could just go pull a list. It's all public records. Everything that I just mentioned is public records. If somebody's going through a divorce, public records. The property's in probate, public records. If they're facing bankruptcy, foreclosure, public records. Also, if somebody buys a property cash, that's public records. We could pull that list and find out who our cash buyers are in our market. If somebody loans money to a real estate investor to do a transaction, that's public records, whether they're a private lender or a hard money lender. We can pull that list. This is all data that is available to us. So when we market to these type of leads, whether you're doing direct mail, which we like to do, whether you're doing Facebook ads, which we also like to do, text message marketing, we're not just picking a random neighborhood and sending letters to everyone in that neighborhood does, like maybe like a pizza place does, right? You ever get one of those flyers, buy one pizza, get one free? Typically, they'll pick a neighborhood and they'll send one there. Now, what we're going to do is we're going to pull the data from that neighborhood of everybody in that neighborhood that is facing foreclosure, or everybody in that neighborhood that's going through a divorce, and we're only going to send letters to those people. So we know that our letters are going out to somebody that is facing a distressful situation, and then we're able to craft our marketing, whether it's our text messages or our yellow letter messages or our Facebook ads. It's going to be speaking directly to them, which will give you a higher conversion rate. So it's to me, one of the most underutilized pieces of data in this industry, where many new investors just don't know this exists, where to pull the data, and really, where to pull the data. There's many services. We have a system called Lead Pro that we use that kind of aggregates public records from all over the country into one piece of software, and then we just log into the software and we pull our list. But when I got started in the business, that software didn't exist. And quite frankly, if it did exist, I couldn't afford it when I first started. But you can simply go down to your local town halls or county town halls. So if you're investing in certain zip codes, make a list of those zip codes, find out where those town halls or county town halls are. You go down, typically, depends on how big the town hall is. Like if you're looking for probate leads, for example, some larger town halls will have a probate office where it's dedicated to that. You could go in there, ask, where to pull the list. If it's a smaller one, like my hometown of Milford, Connecticut, you go to the clerk's office, right? And then typically you'll pull the list. You just go to the lady or the gentleman behind the counter, say, hey, I'm looking to pull a list of all the probate properties, over the last 6 months, in this zip code. And typically there'll be a computer that you download that list from, or a book. Sometimes you have to gather some information from the computer or a book, go into what they call the vault, and then you pull the list out from there. But if you're willing to put in a little bit of time, it's all public records. It's sitting out there. As I said, there's many services. You could just, swipe your credit card, which is what I like to do now, that just, provides them for me. I don't have to go hunting for them and searching for them. So once you have those lists, it's just, man, then you found that remote little fishing hole, that most other people don't know about. So if, on market properties, if it's getting exposed to the entire market, realtors from all over that area are bringing buyers. They're getting multiple offers. When you're dealing with these on market lists, maybe there's another investor or two in your area, marketing and pulling that same list. But even if that's the case, you've drastically cut down the amount of competition. But in many cases, you are going to be face to face with the seller, and you are the only one approaching them about their property. So that brings us to the question is, where should we be spending our time? And the answer, you may be thinking, well, it's obvious, off market. I would say both. If I had to pick one or the other, I would definitely go off market. But again, don't ignore the on market, because 80% of all properties that trade through there. So there's a huge amount of inventory. And if you have a systematized approach, if you don't have that, go back a few episodes to when we had Dan Wright in here, the head of acquisitions for CT Homes, and he walks you through our process. So we're being efficient. We're not spending a ton of time on properties that are going to have 10 offers on them or things like that. So we want to have systems for both. Maybe you're an investor where you've just been focusing on market, and you've been feeling the pains of this competitive market. You've been feeling the pains of getting consistently outbid on properties and things like that. Then it sounds like you need an off-market strategy. So lists that I love probates. As I said a moment ago, I love absentee owner, vacant property list. But really, it's not the list that is ultimately important. It's really your consistency in marketing. I don't care what lists you choose. If you're consistent in marketing to them, then you will have consistent results. And one of the things that I love to do, I mentioned, yellow letters, which are tried and true. I mentioned text messaging. I mentioned Facebook ads. But what we love to do is layer our marketing. So we pull one list. So say we have a list of 500 people that are absentee owners, vacant properties with high equity. Then I'm going to send yellow letters to them. I'm going to send text messages to them. I'm going to do Facebook ads to them. We'll even pick up the phone and call them. So we have different types of marketing to reach that one list versus pulling a list of 500, sending them yellow letters, pulling a different list of 500, sending them text messages. We really want, it's kind of like we want the Army, we want the Navy, we want the Air Force and the Marines, coming at that list. Just give us the highest probability to succeed in your market. So that is that, folks. On market versus off market. We want our hands in both. But we really want to be working those off-market lists, in my opinion. So definitely leave some feedback here. Let me know. What you're having success with in your market. Let me know what type of lists, in your market are really, giving you good, consistent results. What are some creative ways that you're marketing to land deals for those? I love to learn. I've been at this a while, and Fortune Builders is, to me, the best in the business, but we also consider ourselves students, and we're looking to get better. We're looking to learn. So leave that feedback. And as always, I would be honored and personally blessed if you would share this show just with anybody in your world that you think needs to learn, financial education, needs to learn, just think about anybody in your life. This is who I want you to think of. Anybody in your life that is not happy with their current job, that is, basically maybe not making enough money to pay the bills, or just struggling financially, is not able to take consistent vacations, is not able to really spend the time with their families that they know they should. That's who I want to reach. Because I was that person in all four categories. And it was really real estate investing that gave me the time freedom and the money freedom to prioritize in life what should be prioritized. So I want to share that and pass it on. So share the show. We definitely appreciate that. And tune in next week. We have a great show in store for you. We should have JD Asajan back in the booth. So we'll get into the latest and greatest of CT Homes. See you next week. Take care.